But yeah, no, I got a wood stove in here. It's one of these mini wood stoves. This is not a big space, but it's like its own. So the thing is, you got to cut like the pieces of wood to be like it's about the length of my hand. It's about as long as you can cut the wood.
Oh,
so
really?
like normal
Okay.
ones that you buy at the store or whatever don't really help me because I have to like cut each
Right.
of those in half or like into thirds.
You can just go out to the woods in your backyard.
Exactly. So that's what I was kind of getting at. So like,
And like you actually own that little plot of wooded
yeah,
area back there too,
yeah, there's
right?
like 2 acres. Most of it is.
Your trees.
Yep, yep. And kind of we farmed it for what we could. Sort of some of the dead standings are the best, but a lot of them are like already on the ground.
Mm-hmm.
But recently, the grid came by and they chopped down one of these trees. It's like a big ash that was kind of it was dead and it was threatening the power lines. So they cut it down and like we were like, hey, just leave the wood. Don't take it away. Don't chip it. But then, it's not lying there for more than a week. And, somebody like came over and rang our doorbell and was like, hey, do you want that wood or do you? And we're like, oh yeah.
Hands off.
Yeah. Hands off. Exactly. So I need to like go hide it. I'm like legit thinking about trying to hide it. There's kind of like this little wood. There's this little stone.
Put up some security cams out there.
It's a little dicey though, but like, it's like it's a big tree. I mean, it's like, it was like it's a good resource. Base, it's probably like that. And like they cut them into big logs. So like one of those logs is easily like 500 pounds or something. Like you can do, those like tire flip things. It's like legit difficult just to like tire flip it.
Wow.
Yeah. So they're easily a couple 100 pounds. Like it's a challenge. Anyway, man, so I gotta like go hide that. And it's kind of sad. My chainsaw is not very big. I think it's like 16 inches maybe. And that's like just barely enough to get halfway through it.
Whoa.
So like just to cut it. Anyway.
Time to upgrade.
Anyway. Yeah. Can't say it hasn't crossed my mind. Because that wood, it's really good too. It's just like a freshly dead ash hardwood.
Nice.
All right, man. Yeah, Operation Choke Point 2.0. It's debanking of the crypto industry, Joe. So and like you might have heard of a smidgen of this if you've been listening to Mark Andreessen talk. He's kind of been making the rounds on podcasts lately. But on February 5th, there was a Senate committee hearing on debanking, and with the focus being on the debanking of the crypto industry. Let's kick this off with a clip. So this is the chair, not this guy. That's Aaron Klein, but this is going to be the chairman of the committee, Tim Scott. He's a Republican from South Carolina.
Under the Biden administration, we've seen the rise of what many are calling Operation Choke Point 2.0, where federal regulators exploited their power, pressuring banks to cut off services to individuals and businesses with conservative dispositions or folks aligned with industries they just didn't like the color of one's skin in my family's history.
What do you think? Yeah, he went there. Earlier, I didn't leave this, but he kind of began the committee talking about sort of his family history about, being denied financial services because of the color of the skin. And he made a comparison between that and what was happening in crypto, which leave it to you.
You definitely don't want to be discriminating on the grounds of, like he was saying, for his family's history. But then it gets a little fuzzier if it's like, on political leanings. So that's not as, black and white as you shouldn't discriminate on the basis of someone's race. It's less inherent to someone what their political leanings are, obviously, than race is, but you still shouldn't be going there as well. But it seems like a lot of the write-ups, though, of this choke point stuff is focused on the industry component, though, not necessarily the individuals being targeted for views that are not popular.
Exactly. Actually, that's a really good point, and I think that some of the ambiguity there, just around the word debanking, got taken advantage of by some of the other members. So, namely, Warren. And again, I didn't focus on this, but just as a little side note, this is kind of on the editing floor here. With some of the things that Senator Warren had said, I think she intentionally conflated the idea of debanking based on the views in which she had mentioned for, like, if you're a Muslim, you got debanked, or if you were a former felon, you got debanked. And then what was really the focus of this committee hearing, which was, having regulators applying pressure to banks to deregulate an entire industry, not on the customer side. And there was actually a clip here that I left out when one of the witnesses, I guess they're called, was, corrected her. And he was just like, okay, what you're referring to is kind of on the customer side, but we're talking about the entire industry. We're talking on the bank side. Anyway, that's a good point. And the comparison that Scott made between, saying that, okay, regulators are applying pressure to the banking industry or to the bank in order to cease doing business with an industry, as opposed to cease business doing with like an individual, is quite different. But I wanted to go over a few things with you. Mainly, he mentioned that there's an Operation 2.0. So I think the first thing we need to talk about is, like, was there a 1.0?
Mm-hmm.
And let's do just like a brief history lesson here. So Operation 1.0 on the slide. So Operation Choke Point 1.0 happened in 2012 and 2013 under the Obama administration. So they pressured banks to cease doing businesses with companies and industries that perhaps Obama or the Democrats in general didn't like, by saying that the bank was exposing itself to, like, quote unquote reputation risk, or that these businesses in general were quote unquote high risk. Now, the industries that were targeted were guns, online gambling, pawn shops, and then arguably the biggest one was payday lenders. Now, a report was issued at the congressional level. So this is from the U.S. House of Representatives in May 2014, which was kind of started the pushback against what they believed was government overreach. So the businesses sued the FDIC and other regulators, saying that the businesses were unfairly targeted by regulators, even though that they were engaged in business with lawful companies. Right. In January of 2015, the FDIC issued a letter that said, quote, "The FDIC is issuing this statement to encourage institutions to take a risk-based approach in assessing individual customer relationships rather than declining to provide banking services to entire categories of customers." They basically just said, go ahead and bank with these industries, just be careful.
Pretty concise guidance there.
Yeah, there's a little more to it.
Just be careful.
A little more to it.
Make sure you don't do anything we don't like in the future that we decide we don't like.
Yeah. So, sort of, kind of one of my takeaways, this is not a political podcast, or we try not to be, although it does kind of venture into that sometimes. I've been doing a little bit of a retroactive adjustment on my views of the Obama administration. I got to remember that during Obama, I really wasn't political at all. I wasn't even in the country. But I was supportive. I was, probably a left-leaning person.
Yes, we can.
Right. I mean, I was, like, aware of it. But again, I was not honed into politics at all. But I feel as though the Obama administration sort of marked a turning point in the Democratic Party. Not so much, farther left, but I think farther authoritarian. And, like, when I dug into this, so Choke Point 1.0, and when I tried to align it with my worldview or my framework, or how I think about the world, I wasn't particularly surprised because of what I saw with Obama and Snowden. So Snowden happened under Obama, and I remember hearing about it and then thinking, oh, Obama is going to do the right thing and shut down the spying on American citizens. And then, like, months and then years went by, and Snowden was, like, still hanging out in Russia. Like, he was, like, still doing interviews from Russia. And I was like, oh, that's weird. Like, I've not done anything yet. Like, how come Obama hasn't shut that down? And like that, that sort of question was the seed that kind of sprouted into this reevaluation, I think, of the Obama presidency. And like choke point 1.0 now is not particularly surprising to me. But that was Operation 1.0. The shutdown of the crypto industry is being called version 2.0. So let me play another clip. Upcoming. This is going to be Mike Ring, the CEO and founder of Old Glory Bank, which is a bank that focuses on those who have been debanked. So particularly with regards to crypto. He talks about two primary ways in which the regulators use to crush the industry.
Well, I like to say that I'm standing between the regulators and America, and I'm the only bank executive who is not intimidated by the regulators. And I definitely fly too close to the sun, but you've got to protect America. And what was really disappointing about FIL 1622 that you referenced, Chairman Scott, is that on its face, if you read it, it wasn't entirely unreasonable about safety and soundness. Unfortunately, the examiners took that to stop banks from even being the on and off ramp. So if you're a legal crypto business, it's one thing that there could be some challenges holding a customer's tokens and keys, but to think you could not be that legal business's bank account was the real problem with FIL 1622. And thank goodness it's been exposed. SAB 121, I don't know how that passed the laugh test. To think that if you're holding a customer's crypto, that you've got to book that as a liability and then put capital against it is ridiculous. And thankfully that's been rescinded.
And he makes an interesting point. He concedes that it is reasonable for the regulators to want to look into holding crypto or being custodians of crypto assets, so like crypto businesses. But he is saying that even holding a crypto business's cash, so not crypto assets, just doing business with a crypto company, traditional banking, so just like holding their cash in an account or something, that was bad enough that the regulators felt like you need to cease doing business with them. And this guy thought that was a step too far. So we're not even talking about, a bank, holding like a crypto industry or a crypto business's kind of cryptos in custodian. It was just their cash. Mm-hmm. But let's look at the FIL that he referenced. So this is the FIL. Now that stands for Financial Institution Letter. And for some background, this is how regulators work. I used to be a regulator at the Fed in New York. And so based on any risk that we reviewed in a bank, we'd get guidance letter. We called them supervisory guidance. And those letters were written by the board. Okay, so what's the board? So there's this thing, in the Fed called the Board of Governors, which is a big building in Washington where Powell works and the Board of Governors works. And then outside of that's kind of the brain, there are 12 regional banks, which are referred to sometimes as the operational arms of the board. Now I work, like New York is one of the operational arms. It's one of the biggest operational arms. Every year, the board will publish like 20 or so of these SR letters. And SR stands for supervision and regulation. And these SR letters, they clarify or interpret regulations. By the way, these letters are public. Anyone listening can go and read them. If you went and typed in like Fed SR letter 10-6, that would be the sixth one published in 2010. And it'll say kind of what elements should be present in a liquidity risk management framework, for example. So some guidance in these letters are very specific, but most of the time they're quite vague. So they might say something like, the quote, the board should ensure that the institution's liquidity and risk tolerance is established and communicated in such a manner that all levels of management clearly understand the institution's approach, ... So you can just listen to that and you're like, okay, that kind of just makes sense, right? This is like common, This is common sense. And a lot of it is written like that. So you can already see sort of where the discretion, happens at the regulator level, and, I'll just add, if you did like a control F, like just control search for the word quote unquote should and must, then you'll sort of see how they're structured. They're just like a checklist almost. It's written in like just standard prose, but it's kind of like just a checklist of things that the Federal Reserve or supervisory guidance would expect to see in like a such and such risk management framework, just for example. Now that's the Federal Reserve. I've got direct experience there. The FDIC looks to have something similar, but they call them FILs. They call them financial institution letters. It's like, fine, whatever. If you look at it, it looks pretty unremarkable. I won't go into every line. You can take a look at it. One of the things that I think kind of stood out, and they start referencing this, and we'll see this in a second. They talked about the FDIC being concerned that certain crypto assets or related activities may pose systemic risk to the financial system. Just note that for a second. But we'll get back to this when we start to hypothesize to real reason, maybe why the Dems don't want crypto at all. Maybe. Now, this is the juicy stuff. All right, Joe. So formal communication happens in the form of letters between the FDIC and the board of directors at the bank. Now, these are very confidential. But recently, select FDIC letters were released to the public. So, shout out for transparency. Sunlight is the best disinfectant, all that stuff. I love it. It gives us something to talk about. And we are all about primary sources here on the Root of All Evil podcast. So let's look at one of them. This is what the letter looked like. They are short. I highlighted a couple things. We got a date up here. It'll say, dear members of the board. And this first box, what I want to draw out is that it cites the guidance. So the financial institution letters right here, FIL 16, 2022. Okay. So it's citing the letter from which this citing the FIL from which this letter is based. The second box, it basically, they just, the FDIC straight up just asked them to delay expansion of crypto asset services. So, we, on this date, we sent a letter to the board, requesting that the bank delay expansion of these services until the FDIC completes its review of the proposed crypto-related activity. And then this third box I wanted to sort of draw attention to is to say that this letter is confidential. It may not be disclosed.
Wait, sorry. So, so these are confidential letters. Mm-hmm. Then how did these come out again?
Oh, so they were I guess they were instructed to be released. I think somebody in the incoming Trump administration released them.
All right. So like this isn't like a scheduled way in which the letters.
No. This is very strange. This is like really juicy stuff.
Okay, got it.
This was like declassified. They came in. This was something that was mentioned too in the hearing that we mentioned. So it was just earlier, even in that day of the hearing, that they declassified this stuff. This is really? This stuff's very fresh. Yeah.
Okay.
Couple weeks plus.
Yeah. So the letter was about a year and a half ago now. Mm-hmm. So presumably this has been causing some sort of activity over the past, year plus. And I guess we're in a spot right now where they're just trying to, number one, challenge that and then get straightened out what actually has been happening so far.
Yeah. So the incoming administration and, kind of how I kicked off this episode had to do with, Mark Andreessen going on and talking about how crypto has been debanked. And then they started saying all these stories about how like an entire industry just couldn't even open a bank account. And that's kind of what kicked off, I guess, Tim Scott holding this committee hearing, inviting these people to talk about their experience and, what can we do about it? And part of all this push to push back against Operation Choke Point 2.0, as was sort of pushback in Operation Choke Point 1.0, is kind of just to raise awareness, get things transparent, get to the bottom of what people view to be, regulatory and government overreach. So, you can imagine the ears of Republicans, again, Mark Andreessen going to them and complaining like, look, and I think Trump has come out to be, kind of pro crypto. And this is definitely part of that. It's like crypto businesses should be able to open a bank account.
Right. As a minimum baseline. And,
mm-hmm.
aside from being, like Trump has stylized himself as like the crypto president. He's got his own meme
Yeah, there you
coin.
go. And like you can get into the arguments for for and against having crypto here, and we'll start. I'll talk about as to why on the face the Democrats are against crypto, at least what they say, kind of the reasons that they want to look into, and then I'm going to put on a tinfoil hat here, and we can hypothesize as to what the real reason is. Proponents for crypto basically say that, look, this is going to happen, okay, it doesn't have to be the US. And if it's not the US, then we're going to be at a big disadvantage.
Yeah. And I mean, anything in a new industry like this, it's going to entail risks. It's going to entail risks of which you don't know what the outcome is going to be. And it's going to entail risks of which you can't even see at the moment. But at some level, like you were just saying, you can either refuse to engage and it's going to happen somewhere else in the world, or, you have to be open-minded to what these risks are going to be and kind of do the best you can, deal with them as they come.
Right.
If the U.S. isn't doing it, someone else is going to.
Right. So let me tell you my reaction to this letter. And again, I was trained at the Fed to be a regulator, and the philosophy there that I learned was that you really can't tell a bank. You're not supposed to tell a bank how to run the institution. If management is aware of the risks and they consciously take the risk, then they can do that. Right. The problem from a regulator's point of view, again, at least how I was trained, is when there are risks and management doesn't know about them. So we're basically making sure that management is going into these risks with eyes wide open and that they're taking, some sort of steps to mitigate it. Maybe that means more capital, whatever it is. But if they don't know about a risk, that's a problem.
Right.
And so like when I read this, it did feel like they were overstepping a little bit here because they just flat out told the bank to back off. The other thing is kind of when I was a regulator. So again, I came in under Trump, and one of the things that they made like super clear that was new and different was that these FIL letters or SR letters, they are not law. And whenever we issued a finding, like an MRA, we as regulators had to tie it directly back to something written in a law or regulation. So again, we can't tie this back to an SR letter or an FIL letter, whatever these are, because the SR letters and FIL letters are not law. Now that's super important. And this is a good example, I think, when people say that unelected regulators or bureaucrats are making laws by themselves. It's arguably because of stuff like this, because they write like a letter and then they start citing it as though this is like something that you have to do. And then finally, kind of the last point that kind of stood out to me is that these letters are confidential, and that's true. But it seems strange to me that the FDIC would write this. It sort of flies in the face of my understanding of the purpose of the confidentiality. So to like explain, there's a very delicate relationship between the regulator and the bank. So the bank is providing extremely sensitive information, right? I mean, this is how they run their business. It's like the models, it's everything. So the bank provides the information, and then in return, the regulator says, we are going to make sure that this information never gets out. That's why it's confidential. It's really to help the bank, not the regulator. So when I see this written here, it's almost kind of like the FDIC is reminding the bank that this letter is confidential. It sort of smells like the FDIC is hiding something. Like if it were me and my understanding, I'd say that like, if you want to make, this letter public or like your Camel's rating public or like all these findings public, like, by all means, they probably wouldn't want to do that because we're highlighting all these problems that they have. But it's for them. The confidential part is to benefit the bank. Now we started talking about this one earlier. So the SAB, the Staff Accounting Bulletin, number 121. This is what sort of you asked about. And like Mr. Ring from the committee that we saw, they said it didn't pass the laugh test. Now this is getting a little bit into accounting principles. I'm not an accountant, but I do understand kind of the idea of holding crypto in custodian. Would be uneconomical if it had to be put on the balance sheet, because it's just, when something, they said, gets put on a balance sheet, you have to hold capital against it. And you don't want to necessarily, quote unquote, like you have a capital like budget, basically. And if you hold it for something like this, it's just not, it doesn't make sense from a business perspective, unless I guess you charge like super high fees or something.
All else equal too, it's like the amount of capital you have to hold against certain securities is not the same. So like,
Yes.
safer the security is, the less capital you have to hold against it. So crypto
So
is like the riskiest thing that there is. You would have to hold a substantial amount of capital against
So
it.
that not to get too far into this, but like what you're sort of describing is if you hold it on the asset side, like when you actually own it, then there's like this whole concept in banking around risk-weighted assets and stuff, and like different securities and different loans have a different risk weighting and all that stuff. How it lands like as like a deposit and it just lands on the liability side. And I don't know if there's a counteracting stuff on the asset. Like I don't exactly understand how they justify this, or what the accounting procedure is. But I will say that you can see right here that staff accounting bulletin 121 was like immediately rescinded by SAB number 122.
Interesting.
They backed that up pretty fast. But the interesting point here, and one thing that Mr. Ring points out, are the dates of the two guidance letters. So this one is April 11th, 2022. And the FIL letter that we saw earlier was April 7th of the same year. So they're within a week of each other. And they're from two very different agencies. So like I can tell you, again, as a former Fed regulator, we spoke with the FDIC a lot. We do exams with them. We spoke with the OCC a lot. We also do exams with them. We have meetings together, but we never spoke with the SEC. It's like, that's like securities, at least at the, actual examiner level, like maybe at some high level stuff, but that's kind of securities and exchange stuff, not bank regulation stuff. So when Mr. King, we didn't hear this, but he says it in the hearing, I agree with him that it is unlikely to be a total coincidence that these two letters, in general squishing of the crypto industry, happened without coordination at some very high level. Or like, to put it differently, the coordination didn't happen at the actual examiner level. It happened at some level higher than those, pretty high up, in my opinion. It is very strange that these would come out the same week.
Now, were each of these agencies like previously engaged in other efforts around this topic? And, this has been something they were both working on, and it was coincidental that these things came out a few days apart.
That's what he's saying, and I generally agree. Just the pace at which this usually works and happens.
Right.
It feels like someone at some level probably said, took crypto in some way, and said, this is going to be a priority.
Mm-hmm.
Why would they want to crush the crypto industry? Now, the stated reasons, the ones that are said in front of cameras is BSA AML, and that stands for Bank Secrecy Act. That stands for anti-money laundering. Crypto is super anonymous. Illegal or illicit activities could be funded discreetly with crypto, and there are already loads of regulations which kind of defend against such illegal activity. So like when Senator Warren pushed forward a bill called the Digital Asset Anti-Money Laundering Act of 2023, she has like a one-pager, which is listed right here, which summarizes the goals. And just reading it really is extending the anti-money laundering regulations to better encompass crypto companies. So it would expand the scope of what various departments would look at. So like FinCEN, the Financial Crimes Enforcement Network, and the Treasury Department, it would sort of make sure to expand into crypto. That's the boring stuff. Let's get into the conspiracy stuff. So let's just talk about this. So like one potential reason, it may be that, again, just theorizing here, if it wasn't clear, could be that Warren wants to push her own digital dollar. So she's actually come out and said publicly that she is supportive, not necessarily of crypto specifically, but a FRB centered digital dollar,
CBDC.
And as you know, the FRB looked into making its own digital dollar, and they came out with like a paper. They talked about it. But I think even more recently, just within like a couple of weeks, Powell came out against it. Like they're not looking into it, right?
Powell made some statement also during one of these hearings. Someone asked him if there were plans to institute one. And I forget if the question was asked in a way or if he inserted this in his answer, but it seemed very carefully he was saying, no, there's no plans under my tenure or something like that. And
Okay,
he's,
sure.
his term's going to finish in 26, and I think it's understood that Trump is probably not going to renominate. So it's probably within the next less than 2 years, probably not going to be something that takes hold. But beyond that, it's definitely unclear.
Yeah, and like you could easily do a couple episodes just talking about like a digital dollar, why that would be a good idea, not a good idea. But let's just say I'm going to say that's not the play here. It might be more the following, maybe why they want to crush crypto. We can ask what industries are being threatened by a strong crypto market. Banks, yes, banks make payments and are intermediaries. But even more so could be payment companies. So like Visa and MasterCard, American Express. Crypto, I don't think threatens the dollar. I don't think it's a threat to the dollar in my view. It's not money because it's a poor unit of account, but it is a very good medium of exchange. And credit card companies are also in the business of being a medium of exchange. They facilitate the exchange. You just tap a card. And I don't know about you, but I wonder how many people actually use the like credit part of a credit card, or if they don't like already have the money, but they just want like a really easy way to make the payment. So arguably, crypto might be a pretty big threat to Visa, MasterCard, and American Express, as well as the banks. And perhaps those lobbyists are pressuring Congress to shut it down. We know that. Jamie Dimon has come out in very strong terms against crypto. He said he would just shut it all down, and he cited BSA AML. Maybe that's the whole reason. Maybe not.
I guess nowadays, like you're saying, if Elizabeth Warren is at some level interested in something like a CBDC, she's all about, at least stated out loud, consumer protection, right? And what that typically translates to, I think certainly in Warren's case, is power and oversight over a lot of these industries. And so I could definitely see how she could see something like crypto, which is a segment of the financial sector very much in its infancy still, and changing very quickly, and new uses are being found for it very quickly within the industry. That's something that's much more difficult to exert control over. So from that perspective, with the tinfoil hat on, it definitely makes sense as to why it would be in her interest, and other Democrats aligned with those points of views, to say that this is not something that, or at minimum, this is something that needs heavy oversight. But then if you get to the point where there is some sort of collusion at the higher levels of these agencies, the SEC and the FDIC, where you're saying that we're not working together, but hey, we need to limit crypto, then it kind of makes sense from that angle. One of the most immediate and hugest criticisms of a digital dollar is that then the government would have complete transparency as to where every dollar is coming and going at all times.
Right.
So obviously cash, you shove it under the mattress or you give it to someone else. It's impossible to fully trace. It's very difficult to really trace much at all. So on the total opposite extreme, if you have complete transparency into every movement of every dollar, there's stated intentions of stopping things like obvious things that you would want to stop, like funding for terrorism and other just egregious violations of the law. That makes a lot of sense, but these things, further down the line, it's not quite as clear how much control should be exerted.
And to be fair, if an agency is tasked with a mission, and that mission is to say shut down any and all money laundering, then they would advocate for something like this. Never mind. I mean, that's
right. So, yeah, it would have perfect transparency into
Yeah,
tracking illegal activity in
that would
money.
make sense because it would meet
Yeah.
their mission. But there are other, other factors and powers that sort of push and pull and checks and balances and all that to try to get to the right answer. I'm going to keep that. I think we're going to come back to that.
Debank certain entities.
Right. And like, to be fair to the FDIC or whatever, if they're tasked with just, maximizing the safety of the financial system, then they're just going to be super conservative. It's like to like give the other side of this, I put the tinfoil hat on as to why I think this is all, a big conspiracy or whatever. The other half of it is just, and that's worth to articulate, definitely. The mindset of these regulators is that you only get in trouble when things go bad. You don't get rewarded when things, don't go bad. Every day something's not going bad and the regulators are not being rewarded. Right. But when something does go bad, like with SVB, and this actually showed up just last week in the hearing with Powell, Tim Scott asked them and talked to him about accountability in the context of SVB. He asked them, in the private sector, when something like this screws up, then heads roll. People get fired. People are put on probation. Bad things happen. How come that doesn't happen in the Fed? I can just say it's just one of those jobs where if everything's working perfectly, you don't get rewarded. But when things go bad, you get punished. So people are going to take just that natural stance. You're going to be extremely conservative. And so if you didn't want it, the other half of this is if, these FIL letters or whatever, it was just to be super conservative. Maybe that's right. Maybe that's the whole story.
And that's really a big issue.
It's like the coordination question, though, that comes around. And the fact that some of these are a bit really kind of overstepping. So you start questioning about the dates coming out at the same time.
Mm-hmm. Because in theory, like if everything's working as intended, these agencies are, working independently, trying to strengthen the system within the bounds of the oversight that each has. And then, if they just so happen to stumble upon the same topic, like crypto in this case, then that's a good thing.
Yeah.
But if they're coming out at the exact same time effectively and expressing similar views with some political context, with, folks like Elizabeth Warren who push continuously for more and more oversight. She was one of the architects of the CFPB like 15 years ago. Then, tinfoil hat, but there's like these people talk at some level. There's no explicit agreements maybe, but at the highest levels of power in Washington, these people are all connected at some level, and you hope for them all to do the right thing. But
so the other, I think traditionally, like the way these regulations typically work is something breaks, right? Something terrible happens, and then they write a bunch of legislation to fix it. So it's a little bit suspicious to me as well that people would be pushing proactively so hard against crypto before anything like bad happens. That's also to me somewhat of a red flag that this is somewhat motivated by like donors or lobbyists. The fact that nothing's broken yet, but that they're already taking like preemptive attacks.
Okay, interesting. Yeah,
that's that is and isn't true, because like one of the buildup to the Senate or to like I guess Warren's passing this thing, they cited a bunch of illegal activity, kind of financial transactions, or just I don't know if it was illegal, but just transactions that were happening with like China and fentanyl. They would cite all these different things, and then all these different transactions that were a little suspect in coming forward with this regulation. So maybe I take that back. Maybe that's a bad example because nothing has really broken. But you do sort of, you do wonder where the attention and the focus is. Is it something that the public is talking about, or is it something that the public is not talking about? And the public is not talking about it, but it's being pushed through, or there are some really vigorous proponents of such and such an act. Then you have to assume that it's coming from the lobbyists.
Right. Yeah. And it's like you think about current views on crypto. It seems like the
Public maybe pro. Yeah, that's
quite
a good
different
point.
than-
Public is probably kind of pro crypto, but for whatever
Mhm.
reason, there's so much push against it in Congress. Maybe that's a sign that there's someone else in the ear. It's not the American people; it's something else.
Yeah, it'll definitely be interesting to
thought.
see, how and if this viewpoint is going to change. I guess starting from right now, pretty much.
All right. Well, thanks for tuning in to the Root of
Another
Volleyball
episode here.
podcast.